Cool. The parties in a real estate development. Real estate investment requires coordination of capital and talents from equity partners, people that put up the money, because, and this is strange, you got to understand this part. How do I turn it off? How do
Top left.
Okay. 1986, I guess. I was in a deal, 86 and 87. I was in a deal where I bought a piece of land, built a building on it, and sold the building. I had two partners in the deal, and they put up all the money. But none of us put up a lot of money. We borrowed most of the money. It was when in '86 you could borrow a lot of money, and we borrowed 100% of the cost of this thing. So when we had our closing, we had some money up, deposit money up, and some expense money up. But we got all our money back at closing, and from then on we didn't have any money in the deal. It was a 100% finance deal. But in 1987 we sold this thing that it cost us $2.8 million to build, and we borrowed all that money. And so the next year we sold it for $4 million. So we made $1.2 million, and my share was $400,000, including the fees. So and in 1987 that was a lot of money for me to have in my checking account, which I did. I put it in my checking account, and then I couldn't sleep that night. Oh my God, how much is the interest on $400,000? I got a checking account, I'm losing money. And I couldn't figure, I had to get up at 3 o'clock in the morning and sit down and figure out exactly how much money I was losing per day. And the next morning I wired $250,000 into my Merrill Lynch brokerage account, money market account. But the first month after that happened, the guys around my office, I was running a big real estate company. I was the president of the Bywater Company. In those days we had 25 brokers, and those guys are always on the make. And so people would drift by my office with propositions for me. Ralph Savage, good friend of mine, come by and he'd say, look, we're starting the Hungerford Partners. Later we would come to call it the Hungry Partners. And the Hungerford Partners was going to buy this piece of land down in Lake Hungerford up in Maitland. And we were going to someday build an office building. But right now we're just going to buy the piece of land and watch it appreciate. Okay? And Ted Bywater, who was the named partner in my company, came by, and he was working on a deal to build a Wachovia Bank in those days over in Maitland on Horatio. And he wondered if I would put $10,000 in the seed money so that we'd get things started. So I did. By the end of the month, I had invested $25,000 or $30,000, I guess it was $25,000 in 4 different deals altogether. And my wife, at the time, who was doing my checkbook, said, what the hell is all this money going out? I said, oh, part of that, one of those is for Ralph, Ralph, and one of those is for Ted. She said, yeah, what is that? You owe those guys money? I said, oh, no, we're putting money into deals. She said, since when do you put money into deals? I says, well, it takes money to make money. She says, well, when did you believe in that? I mean, at that point, I'd been in real estate. I was 87. What's this? This is 13 years ago or 23 years ago? Time goes so quickly when you're having fun. Oh, my God. That's a long time. Anyway, she said, when did you ever believe in that? I said, she said, when did you put money in a deal? I said, well, we had she says, no. I said, oh, I know, the deal that Tony and I did down on Sand Lake Road. She said, oh, no. You put that on your credit card. I said, well, this deal, I had almost $30,000 in this deal. She says, yeah, but we've been living on our credit cards for 11 months. You finally got your money back. He said, but you didn't put up any real money, in that deal. I said, okay. So she took the money and bought a house, or actually bought a lot and built a house for almost, well, it's over $500,000 when we got done. I still got the house.
Yeah,